What makes a real estate investment truly halal, and how does this differentiate from conventional finance?
So the key thing here is Islamic principles, and people forget that all of these regulations and rules we have when it comes to doing business, when it comes to investing in property, they come from a very special place. They come from a place of Quranic, divine knowledge, the best ways to do business and the best ways to promote an equal and fair society. So if we have the principles of fairness, we have the principles of being equitable at the top of our minds in a Quranic and Islamic context, then we can truly approach the topic of Islamic finance. So Islamic finance investment principles there are a number of them, the most important of which will be, as no surprise to your viewers, that there is a complete prohibition on interest. It is said that the one who involves an interest, engages with interest, declares war on God and his messenger. So this is a severe thing. And I think in recent times, we've become very relaxed about interest. We've become very complacent in taking conventional products, involving with high street banks, and not looking at the options that there are out there. We are putting our souls in jeopardy by taking on these products. And I think that more people need to be told that. For too long, people have relied on the Darura argument. Now, the Darura argument, for those who don't know, it mainly stems from a fatwa from 1999, where a person went to an Islamic scholarly group in the US and said that, look, he can't buy a property because renting was expensive, he didn't have enough money, and there were very specific circumstances, and a fatwa was given for that specific individual that he had extreme hardship and that he could go for an Islamic product. What it wasn't was a fatwa for all Muslims in all contexts to get non-compliant loans. Yeah. It's contextual, completely. And I think people forget that. And even I, when I was doing my studies to become an Islamic finance solicitor, I was previously under the misconception that the rule was quite broad and that people could rely on it. I have now since discovered that that is not the case. I've spoken to scholars in detail, and they've advised me that that was a specific fatwa for a specific situation. So, I mean, there are situations where people could rely on darura. For example, you know, if you haven't got enough savings to buy it outright, if you're renting, if there are genuinely no other Islamic products, if you're not buying it for an investment, or if you don't have the requisite capital to find a somewhat appropriate product, then you can go down these avenues, right? But the point to note is, you don't necessarily need to go for an Islamic bank. There are options out there that are not Islamic, but are designed in a Sharia compliant way, like home purchase products. There are a few such companies, I won't mention their names, but there are some companies that are not even owned by Muslims that offer products which are Sharia compliant and actually have been approved. There is a variety of options out there. Fintechs have revolutionized the Islamic finance world, and I think, fine, you've got issues of availability, so not everybody can easily access Islamic finance. But there are options enough that some people can, and really it's reduced the category of those who would fit within the Darura argument to a very small minority. So going back to your principle, so I've said no interest. Now the second one is quite key, no gharar. That means no speculation or no extreme uncertainty. Maysir and gharar, those things are, for example, buying a property from auction without having visited the property. I can count a very dear friend of mine who actually has done that, just that. Although we did our due diligence last minute, we didn't actually physically see the property, and it's probably on the borderline of compliant, because you're buying something with a speculative nature, with a risk. And furthermore, there are certain other prohibitions in that tangent. For example, flipping properties. That's kind of a grey area as well, because if you're buying a property without adding value to it and hoping that you can flip it for a higher amount, is that transaction necessary Islamic finance? Now, you would be right to say to me, Aziz, fine, you're saying that we can't do interest, we can't do speculative deals, and we can't take unnecessary risk. What are the options? Well, we have options. We have at least 3 solid Islamic financing mechanisms. We have murabaha, which is basically the bank purchases a property and sells it on a cost markup on deferred payment terms. So the bank buys a house for you, sells it to you on deferred payment terms, payable over 5 years or whatever, and then you have a fully Sharia compliant contract there without any speculation, without any risk, without any interest. Right. And the most common used mechanism is commodity murabaha, which is where you go to the bank and say, I want to buy a property on Broad Street and I really like it. The bank then buys X millions worth of metal. sells that metal, which you then sell immediately upon you receiving it, and then you use that money to purchase the property. So, but then you pay back the cost of those metals over the term of a facility with a deferred payment markup. So, you're basically, it's exactly the same thing as with a property murabaha, except that you're using commodities to facilitate the ease of a sale. So the bank doesn't always want to take legal title to a property, so it uses commodities instead. And I think that's a completely fine and acceptable solution to the problem that we have really in English law regarding registrations. Now, the final method, or one of the final methods, is the diminishing musharaka / ijara method, and that has a bit of an issue for some people, which is why commodity murabba is still one of the most popular. And the issue there is that the bank owns the title to the property, so it's not suitable for people who are bridging and stuff like that. Yeah. But for your average home product, diminishing musharaka and ijara is perfectly acceptable. What it is it's a partnership. In the case of diminishing musharaka, you have a partnership with the bank. The bank and you own shares in a given property in accordance with the amount that you put in. So you have equity in that property. Let's say you put in 30%, you own 30% of that property. The bank will charge you on that rent, on the 70%. And as you make your payments, some payments will be against the rental payments and some payments will be principal. So you will increase your share from 30% to 50 to 100 over time buying that property. Does that make sense? Yeah. So basically there are options here for Muslims to invest. You have very reputable banks like Gatehouse Bank, QIB, Al Rayyan, BLME, Stride Up, FIDA, Way Home. I can list so many of them. And a lot of people, they come to me with this criticism: Aziz, we can't get Islamic finance. It's so expensive. And I actually say, well, hang on a second. Why is it expensive? Yes, it's expensive if you're comparing against a 90% loan that you're getting from the high street. Islamic finance isn't designed for such high leverage amounts. Exactly. We don't have economies of scale. Yeah. So if you're at the 65, 60, 55, even potentially loan to value area, you're going to get a more competitive deal. So save your money, stop buying flashy cars and expensive mobile phones, and save up a little bit so you can get a product that fits with your lifestyle and that is Sharia compliant. Compromise on certain things in order to secure an Islamic product and actually your Islamic financial health. Because if you are making sacrifices for your deen, for your dunya, for your deen in the dunya, Allah will reward you, no doubt, with a long-term, more prosperous, more blessed, more bountiful allotment from His blessed hands.
So you're almost saying, if Muslims were to purchase more of these products, would the economy of scale go up and make these products more readily available also?
Without a doubt. Now, look, let me give you a scenario. Let's say that Santander has 1 million employees, and it does, 1,000 employees, there's 1 million loans a year. And contrast that with an Islamic bank that has 100 employees and does 1,000 deals a year. The economies of scale are so way off. And exactly. So a lot of people who criticize Islamic finance and the costs involved don't realize that they're part of the solution. All they have to do is put their money into Islamic savings accounts to make...
So they're almost enemies of progress, you're saying?
100%, 100%. Enemies of progress is a strong word. I think illiteracy is a problem, financial literacy. And we're probably going to come on to discuss illiteracy and financial literacy in the context of Islamic finance. Because I think if people become more attuned to what their own Islamic obligations are, they will become more involved and more embedded in the Islamic finance system. The fatwa that was given by those scholars in 1999 and thereafter was very clear in that Muslims have an obligation to put in place structures that make it easy for Islamic property investment and Islamic property purchasing, particularly creating Islamic banks, but actually even creating construction companies with a more Islamic method of sale. For example, deferred payment. There could be a markup on that basis so that the developer is also acting as a quasi-financial institution. It's a huge amount of risk, I guess, from a capital perspective, but if somebody had the idea to do a developer/funding provider in one solution, that could solve a lot of problems that we have at the moment. And I definitely think there's a lot that needs to be done in terms of thinking outside the box and thinking along the lines of what does Sharia advise us to do, because that solution is likely to be the best for us.
How does Islamic finance ensure ethical development in real estate?
So we've talked about interest and how dangerous interest is to the Islamic investor. So no interest loads of partnerships, loads of joint ventures, loads of unique funding arrangements using istisna, project finance and whatnot. So that's step one. Step two is the fact that Islam doesn't allow us anyway to involve ourselves in properties which are unethical. We couldn't own a nightclub. We couldn't own a building and lease it out to a nightclub. That would be a non-compliant lease. We couldn't do the same thing with respect to a pub or even a conventional bank, actually. So we're covered from that angle, and in ethical investments and the use of the property are tied together. Furthermore, we've got the requirement for fair risk sharing, for risk and reward to be given and allocated appropriately, so that the bank is, in a conventional sense, the bank is taking very little risk and benefiting a lot if it's a huge, high interest rate environment, like a bridging loan, for example. Whereas in this case, in a joint venture case, for example, the Islamic finance recommends the musharaka transaction, or even the mudaraba, there is a equitable share of risk. The parties that are putting in efforts get rewarded according to their percentage splits. And everything, the key here is, everything under Sharia needs to be pre-agreed at the outset. There can be no uncertainty in the contract. Islamic contracts must be very specific and written effectively. So it's great for lawyers like me. We spend hours poring over contracts, thinking of every computation and possibility, and trying to basically cover both sides of the client, not only from a client perspective, but also from a Deen perspective. That I feel that when I'm doing some of my contracts, the Islamic ones, that I'm accountable. Yeah. Like we did a contract a few years ago. It was the UK's first murabaha with a governmental type organization. It was a local city fund, and they funded MRI acquisition for one of my clients. So we went over that contract from a core commercial angle, but also from a core Sharia angle. Like, what is acceptable for the bank? We even went to the level of having 3 people ended up signing, so 2 witnesses and the signatory himself, just to fulfill that Sharia requirement of 3 people being party to the first element of the contract. So yes, there's that, so the inbuilt rules on contracts and them being fair. We have a social responsibility angle in that we have our zakat monies that we need to pay, and if that's used, for example, for feeding the poor and stuff like that, then that's getting our zakat obligations out of the way. But a key thing that many people forget is that there's this concept of waqf. Now, waqf is charitable endowment, and in fact, one of the best charitable endowments I know is a property. So the Ikhwan, Uthman ibn Affan waqf in Medina, I think it started from a well that was purchased at the time of the Prophet, peace be upon him, and over time the rental receipts or the payments that came to for the use of that well, they grew, and then other investment properties were purchased, to the extent that if you now go to Medina, and I think it's gate 13, you'll see on the right hand side as you're exiting the mosque, there is a hotel, the Uthman ibn Affan Waqf Hotel. Yeah. And that hotel and the funds from that hotel, I think, correct me if I may be wrong, and I may regret saying this, but it was like something like 50 million, I think, that in terms of generative income. Yeah, it was something like that. And they were using the money from that wealth to send dates to far-flung countries and packs for Ramadan, amongst other things. So this shows that the power of waqf, and I know many investors that have been very successful here in the UK in property development particularly, who have created their own waqfs, and actually they're desperate for projects to fund, for the betterment of the ummah. So that's also ethical. Making yourself wealthy is not a bad thing in Islam. Wealth is seen as a good thing. Undue wealth is another thing, but wealth that's come to you by halal means, where you've had your contracts in accordance with Sharia and have been ethically compliant, it's a blessing from God. And to be able to compound that blessing would be to put it in a waqf and generate further good out of it. And finally, I think the main thing here is Islamic finance and Islamic ethical development is asset-backed. There's very little speculation, and actually, if the banks are going truly in accordance with Islamic finance, there's no speculation, there's no hugely massive leverage levels and risky lending and loads of SPVs putting in small amounts and buying properties in risky situations. And so yeah, I think generally Islamic finance is very sensible and very sober with the way that investment takes place.
How can Islamic finance tackle the challenges of debt-heavy markets while staying true to Islamic principles?
Well, this is a really key question. Debt-heavy markets propose an opportunity for Islamic investors. So I'll say that again. Debt-heavy markets pose an opportunity for Islamic investors. Look at the past couple of years. We've had economic instability due to inflation, which has caused interest rates to go up. So you've got a high inflationary situation. Central banks are pushing up interest rates. This means that people who took on risky projects using very tiny amounts of equity and a lot of debt have probably gone bust. So for example, I'll give you a situation. Let's say that 3 years ago somebody bought a plot of land for an extortionate sum because the market was really hot and there was a lot of interest because interest was at 0.5%. Money was practically free. So they were buying these sites hoping that they could do a quick job in building a huge development and selling it on. Yeah. So let's say that they've started the development, the cost of their financing goes up by 300% because it might have for some people. The rise that went up to 6-7% it went up to, something like that. So the interest rate went up, and then these people then are just about paying their banks, but they can't pay the builders, the people who are there doing the work. So work stops because the builders go bust. So you've got a half-developed site that then goes to the market because the bank foreclaims because no development's going on, it's looking too risky for them. The interest rates weren't what they were at the beginning, which meant that the developer can't make it successfully, it can't do the deal. Yeah. And then also you have materials costs and all the other things that go up too. Yeah. Exactly. So then you have a situation where people who are not highly leveraged can come in and say, with a sober mind, and say, actually, there is value to be found here, and they can get the asset at a price which is not impacted by a very debt-heavy market, and basically pick it up with a more with a more focused mentality that, how we see the costs here are going to be X, Y, Z. They're going in, I've seen many investors recently go in at 100% equity, 100% cash, buying these sites. They're Islamic investors. They do the site, they finish the job, they pay their constructors, the contractors, and then they sell the flats and they make a massive profit. And then some of them even put the money into waqfs. It creates an ecosystem, an Islamic ecosystem. So that's one thing. I think that we talk about debt-heavy markets being a challenge, and what I would say is actually it's not a challenge. Let's not follow the herd. Let's do things our own way. Instead of, for example, over-leveraging, which causes instability, which causes jittery markets, which, instead just invest soberly. Don't pay massive premiums for property. Don't take massively expensive loans or loans that may become massively expensive, and actually collaborate more. Like, I dream of a world where we have a property development that takes place with the lawyer taking an equity stake, with the developer taking an equity stake, with the contractor, with the architectural firm. Everybody just takes a slice of the pie and says, look, I'll give some effort to this, and this is what will come out of it. You need a good lawyer to do that because of the splits and the risk and reward ratios and all that. But my dream is that we can achieve this. This would be like a perfect Islamic contract, inshallah. Yes. So that's a hope, that we have alternatives to the current model. Another thing that I think people need to consider is that we don't just have to look at London. There are many opportunities if you just cast your mind to what we think the UK will look like in 10 or 15 years. I think we're going to see more regional hubs. I think Manchester is going to be a huge economy. There's going to be a good pool of young talent there. Birmingham, edges of London, Croydon, for example, Reading, commuter areas. We're going to get easier commuting situations. There's going to be better transport, better cars, cleaner cars, self-driving cars. So we need to ditch our London focus and think, actually, where do we see the UK real estate market being in 20, 30 years' time? Maybe buying undervalued assets now on the edges of huge cities would be a sensible option, because if we do go to a driverless world, then you could just pop to London in 2 hours with the car driving itself and you working. It changes the equation. It makes the property values on the peripheries more expensive than they would be now, and it makes property in the city valued much less. So there's a lot of forward thinking that I think people need to do. I'm not saying sell everything. I'm just saying think to the future. The pie is not always what it seems, put it that way. It's much bigger and it's much deeper and it's much more flavorful than you can imagine.
Aziz, why is a robust regulatory framework critical for protecting Muslim investors in real estate?
So Muslim investors are a very small niche, which leaves them somewhat vulnerable because there may be gaps in regulation, and we've heard recently of Ponzi schemes involving real estate and crises that really should have been prevented. I think generally I'm quite comfortable with the regulatory framework here in the UK. You've got the FCA, for example, and all Islamic banks have to get an FCA license. And the FCA tend to monitor conduct and consumer protection. They're constantly looking at products and promotions to make sure that these Islamic banks are operating in compliance with UK regulations. So Islamic banks are not outside of the net of normal banking. They are treated exactly the same.
Right.
You then have the Prudential Regulatory Authority, which basically regulates Islamic banks and supervises their liquidity. So behind the scenes, behind the customer-facing front, how are things working from a liquidity perspective, the instruments that are there, because we can't use interest-based instruments for liquidity management. So they have an alternative now, the Bank of England's alternative liquidity facility, and that basically involves the use of sukuk and as opposed to bonds and other governmental bonds and debt and other such things. So there are things in place to protect the back end as well, so that they don't just go bust. We also have Islamic regulatory authorities like AOFI, for example. They govern the rules on accounting for Islamic banks, and we have the IFSB, which sets global Islamic prudential and risk standards for Islamic finance institutions. But more importantly, we've got the concept of a CIS. Now, I've printed out a bit of information here about CISs, collective investment schemes, because actually a lot of people who do property-related products that are aimed at Muslims could potentially fall foul of the rules, the regulations when it comes to collective investment schemes. So a CIS is a scheme managed by a professional fund manager rather than individual investors, key. The investors don't have day-to-day control. So you can imagine a guy comes to the mosque and says, look, I'm setting up this fund. Do you want to get involved? I'm going to manage it. That could potentially be a CIS, which means it's regulated, right? Yeah. So then if there is a CIS, and if it's found that the requirements for a CIS are met, then that must be authorized by the FCA. So there is another protection there. And unless it qualifies, of course, as an exempt scheme, and you do get circumstances where that might be applicable. But in the scenario that we discussed about Muslim investors being at risk, from a property perspective, it's likely the CIS rules might be of some benefit. And there's a number of requirements that if it is a CIS, it must be FCA regulated, it must be fair, clear, non-misleading, it must be specific in its authorization and meet certain capital adequacy and government requirements. There needs to be investor protection, risk management, segregation of funds is a key one, particularly given what we've discussed, before this podcast. Liquidity requirements, and key thing, assets need to be priced fairly. So if we look at the whole context here, we do have solutions to the issues that we've seen. I think we need more policing, and a lot of reporting. We have a culture where if we see something wrong, we don't speak up. No. And I think we have a duty, to raise concerns that we have, even if the institutions are Islamic. There's this no snitching mentality, and we think that we'd be casting shade on someone's success, but we need to protect the Muslim brand, we need to protect the Muslim name. Yeah. And as a result of that, we definitely need to be making sure that Islamic companies are held to the same standard as non-Islamic companies. Mm-hmm. We as Muslims have to live in a country and uphold the law of the land and follow the law of the land. For example, there are many things that we could talk about, the FSMA and all the other types of regulations and protections, but basically, my advice is to your listeners and viewers, if they see something that looks too good to be true, it most likely is. And I think that with the case of that in the investments that we've been discussing where Ponzi schemes and that term has been used, me, you, anyone who is somewhat financially literate would be able to say, this is it's unreal. Yeah. It's not possible. There's a massive red flag here.
How can the community improve financial literacy to empower individuals to make more informed decisions?
So I think we have to say that there's some good news. So Gatehouse Bank did a survey recently, and out of all of the people surveyed from 2019 to now, the data from 2019 and the data from last year shows that there has been an increase in knowledge about Islamic finance. And I credit institutions like Islamic Finance Guru, Wahed, and other such organizations who populate and push out loads of really helpful educational content on Islamic finance for the masses. Mm-hmm. So we are doing a lot, and I think the industry does, though, need to pull up its socks in terms of getting people to buy into the whole Islamic finance economy mentality. So not just property, but starting from savings accounts. Muslims should start using current accounts, which are from Islamic banks, and savings accounts so that they can grow the economy. If we put our money into Islamic bank savings accounts, that then increases the pool that is available for the banks to offer Islamic compliant loans. and then it perpetuates a cycle of increasing, of compounding. You know, everybody shares in the benefit, particularly those who are invested and buy in. Hopefully the dream is that we get Islamic insurance products like Islamic takaful. And the concern I have is people who are reluctant to go to Islamic institutions because they don't trust them really need to start looking at the regulations that these banks are held to, the standards that they're held to, and they are pretty significant. And really, for example, you have FCS protection up to £80,000 for Islamic accounts. So is there even £80,000? Is there really a risk? You know, you've got cover up to that amount. You could make different accounts with different banks to increase your protection net. And some people say they're not compliant. Some people say they are compliant, these schemes. But I think on the whole, they probably are because, you know, it's not something that you're paying for as a product. It's something the bank is giving you free of charge because it's a government requirement, an FSCS requirement. So you've got that context, and I think education generally is a tricky one because you can't force Islamic finance down people's throats. I think as we become more Islamically minded in our way of life, more conscious, praying more, linking with the mosques, and then we will start to tune in more. Just like you can train your LinkedIn algorithm for cars or whatever, mine is obsessed with Alfa Romeos, but you can also train it to tell you about Islam. And I think more people are doing that with TikTok and Instagram, and are becoming more Islamic in their approach and seeing the holistic picture of Islam as a lifestyle, not just an individual go to mosque, come back kind of thing. It's a system for the betterment of society and the betterment of each other. There are organizations that I'm part of, like the Riba Free Foundation, which exists solely to encourage people to stay away from riba, to purify their income, to avoid haram, and to give the context behind things. The key thing is context. If people understand the reason why they should or should not do something, they are then more likely to do it. If you ask people blindly to follow and you don't give people options, particularly with Islamic finance home products, then they're very unlikely to come to your way of thinking. So yes, I hope that we will do more. I think we're in a good place, but we could be better. We need to get people using Islamic home products. I think that's the biggest issue for me. If 90% of Muslims are not using Islamic products, which is like my estimate based on the people I know, then either the industry is not serving people that it could serve, or we've got a serious knowledge gap. And the more needs to be done with respect to that to solve the knowledge gap. I think that's the key thing here. Get more people engaged, get more people involved in the economy. I think if people want to make a really big impact to their own understanding of Islamic finance, they should do the relatively simple Islamic finance course run by the CISI. They've got 2 levels. One's a basic and one's an advanced. Just do the basic one and read up on Islamic finance. Understand the methods, understand the rules. It will benefit you in this world and in the hereafter.
Sure.